Good evening and welcome to the Trading the Tech Show for uh, October 7th. Today is Wednesday. Getting my days confused just a little bit just because of kind of working around the clock and putting in a lot of hours and being pulled in different directions. So um, we want to talk about the market today and what we see as a result of the market today. This is a client account, so I don't want to be in here. I want to be over here. Um, we're going to take a look and see what actually occurred because we've got quite a bit of movement in the market today, and because of that movement, and because of the news that kind of came out today, we've been actually just moving away from some of the things that we saw developing last night. So we're going to kind of look at these all again, go through all the pairs, look at each of the charts and just kind of see where are we now because, typically the market is, it's fairly kind of predictable in the way that it moves around. But then once you get like some news like we had today or some crazy announcement, then all of a sudden we get, movements in a lot of wild fluctuation in the market. So I was working with a client today and I noticed, out of the corner of my eye on my cell phone that, the market was kind of going crazy. And I'm like, okay, something's out there. There's some news or something out there. So I needed to find out what that was. The news that we got was that the stimulus talks had broken down, and Trump said that there would be no more stimulus talks until after the election. So, as I've said multiple times on our daily market overview show and on our Trading the Tech show here as well, that when we're trading, especially the dollar-based pairs or the majors, we have to be mindful that these talks are going on and that these different things are happening in the news, and that those are the things that can be the anomalies that come through and ruin everything. All of our analysis, everything that we're doing, they could change it in an instant because it would be such a big announcement. So that does happen in forex, but this is the reason why we need to position size correctly. So that means choosing the correct amount of lots for your trades. So this is really a balancing act, which we're performing is, choosing the right lot size, not overloading the account with too many trades. That can be, the number of trades per pair, but then also, the size of the trades as well. So typically we're trading 0.01 or the smallest micro lot per thousand dollars deposited. So if you're underneath 1,000, then your micro lot should really be at 0.01 if you're going to trade across the board. And most of us are trading across the board. We're trading all of the pairs that we're eligible to trade or that iLi Academy deems as eligible to trade due to spread and the liquidity of the currency pair as well. So that's what we're looking for. We're looking for the ability to trade across the board so that our auto traders can actually work and give us a lot of opportunities to be profitable. So it's not easy, balancing all of that and then, having, some wild, news report, come out too, or some wild tweet happen, we can see like something like stimulus is directly affecting consumers. And we have already talked about consumers making up about 70 to 75% of our GDP. So when there's an announcement saying, hey, we're not going to support consumers or the citizens of the US, we're not going to support them as consumers, then that's saying that we're kind of abandoning the economy until after the election. And that's not the message that needed to be sent. And we could see it right away in the Dow Jones. We were up about, I think, somewhere around the 28 300s something mark. And then we ended up down at the 12,700 mark. So there's about a 600-point swing on the day just off of that announcement. So you can imagine that the forex market went pretty crazy at that point in time. So we're going to take a look at some of the charts and just kind of see what the effects of that was. Let's start maybe with this Aussie US and kind of see, if we see anything there. We see here just a few hours back, our Aussie US has definitely fallen below that 720. And it's starting to gain trend to the downside. Actually, it did actually straighten out into trend because our 100 finally jumped over our 200 here. And now it's beneath it. And so now we have full trend to the downside. And so what our expectation is that it's going to continue to the downside. Even if we pull back to the 50 or 100, then we would get some more momentum to the downside. So we talked about last night the negative correlation of the dollar to the Dow Jones. So when the Dow Jones is down, the dollar's up. And when the Dow is up, the dollar falls. So we can see that the Australian dollar here, the Australian dollar fell, but the US dollar is gaining strength at the same time. This is what this move represents. So in this situation here, we're talking about a stronger dollar, and that's, makes sense because the Dow was falling today. So looking at this, I'm looking at pullbacks, and then trade short. Okay, that's what I'm looking for. That's the direction. Let's go out here to the Euro US, see if that kind of had the same effect. Let's bring it out a little bit here. Good. So on the Euro US, we see rate is below the 720. It definitely pushed down quite a bit after being in an uptrend. We had just barely set up the uptrend here, and then we got crushed, right? So we got pushed down here below the 720. And then, we didn't even find a floor there. We just really kind of surpassed that and kept going. And now we're kind of consolidating a little bit because traders are going to wonder, well, did we overreact? What else, what else is out there that might have actually been good news and it caused us to want to be bullish. And then all of a sudden this news comes out and turns us bearish. Is this really where we want to go? Or can we calm down from the announcement? And are we going to be all right, regardless? What's really changed at this point besides just the announcement itself? And so traders probably are taking a brief reprieve, looking at that and going to figure out what the direction is next. So we've got some consolidation here. We don't have trend to the downside yet. Our moving averages are just not in place yet. So on this Euro US, I would just kind of sit back on that right now because we're just not ready to make that decision on what's going to happen. Looking at the pound US, kind of the same thing, right? The moving averages are starting to kind of, head down, but at the same time, we've got consolidation here right under our 720. We were in full trend to the upside. So my guess is that if traders really kind of look at this, they may actually go back to the upside on a lot of these. They may go back to the trend that they were creating. This is just maybe a knee-jerk reaction. That's just my feeling on it, because I know traders typically react to news like this, and if it was coming from a more serious source, then I could understand it. So typically when a president makes an announcement, it's considered a pretty serious source, and there's not a lot of waffling or going back and forth on what's said because it's carefully thought out. But when you get someone who just tweets something out and then all of a sudden, it causes, a frenzy in the stock market. And then after that, just a couple hours ago, he comes back and says, well, I'm ready to sign something if you send me this. And that's, it's sending uncertainty into the market for almost no reason. Well, you could have had that conversation behind closed doors instead of putting it out into the public and then having the reaction that you have. How many people lost money because of this? Or, I had someone on my Facebook profile talking about them pulling their money from the stock market. They bailed out because it didn't look good for them. So they just kind of bailed out. They were like, oh, I don't want to take a big loss. So, it has real effect on people here on Main Street who are trying to trade, so Wall Street as well, but Main Street is the one that gets hurt most of the time. And what'll happen is tomorrow it'll rebound or something, or he'll come out with a different tweet and it'll rebound. And then that person just really kind of lost out because maybe they took losses they shouldn't have taken. So that's the fear that kind of comes with those types of announcements and things like that. If you don't, if you're not trading with a good group like us, if you're not, learning how to trade and how not to panic, if you're learning how to lot size correctly, things like that, then here in the Forex market, you don't have to worry so much because we're built to pretty much weather the storm. The way that we trade is built to kind of weather some of those storms. The storms will come. We talked about that before. So we have to just be prepared for what we're going to do during that time. So if we have to do anything at all, right? So if we're looking at this New Zealand US, let's go here to this chart as well. We kind of got the same situation, right? So we've got dollar strength all over the place. The New Zealand kind of fell through here, still kind of showing some red, but it's found a floor here down here around this 66 area, or actually 65.80s area. So below 66, it's found kind of a floor. And if we don't really continue to push here, I think we just head on up to the upside again. You know, maybe our market Dow Jones, you know, rebounds tomorrow or something like that. And then, you know, if there's a big rebound tomorrow, then these all tend to go back to where they were before. Maybe people will learn not to be so skittish with the announcements. But this is a good thing to see. It's good to see like an announcement like that, something that would affect the US economy, affect the stock market, how that affects the rest of the Forex market and the dollar itself. So if we're looking at the US dollar CAD here on the 30-minute chart, we can see that we got that dollar strength here. We got a little bit of a spike here, and then we continued on up on this 8. And now the moving averages, they're not in order quite yet. We are still waiting on the 50 and the 100 to kind of jump over the 720 and the 200. So this is a little bit out of order here. It's not set up just yet. I wouldn't necessarily bet on us going to the upside for any length of time unless unless we really get that sell-off in our Dow market. Or our stock market. So looking at this US dollar Swiss, we're headed off to the upside here, but we're just above the 720. We're just kind of hovering on that 720 right now. The 50, 21, and 8 are in order to the upside, but the 21 and the 200 are sitting here below the 720 in order to the downside. So I feel like if we return to the overall trend to the downside, that there will be a lot of opportunity for, you know, pips to be gained on the way down. So we'll see if this continues, you know, if we get any real momentum to the upside, or is this just a knee-jerk reaction and then we go the other way. Looking at the US dollar yen, we talked about this one. We got this big move down off of the 720, and then we actually turned back around and headed right back to it and just kind of hovered right around this 720, and now we're flat and just trading to the right again. So this one, it didn't even really look like it turned down at all. It didn't really look like it turned up for us either, just kind of sat in the middle. And that might be because the Japanese yen is a safe haven currency. The dollar is a safe haven currency too, so there was maybe in that announcement, maybe the money was kind of flowing a little bit evenly into both of those currencies, so we couldn't get a lot of traction one way or the other because the flow is into those currencies. So look at the US dollar Swiss. On the US dollar Swiss, we see that we're hovering right there on that 720 again. So, you know, same expectation. If this proves to be, you know, just kind of an anomaly, I think the market gets back into its form of being bullish as far as the stock market, and then our dollar continues to fall. So we'll see what happens there. That's pretty much the US pairs. I wanted to kind of go over them so you can see them. Now let's take a look at some of the yen pairs. Let's look at the New Zealand yen here. This is the 30-minute chart. You can see on the end here that we kind of fell off here. The New Zealand dollar kind of fell, got weak based on the news that we just got. And the yen is benefiting because why? Because money's flowing out of the New Zealand dollar and into the yen. So the yen is benefiting, but the New Zealand is falling down. So we're going to see how this plays out. Once again, the moving averages are not in order here. So this news event, you can see how it just really kind of took our analysis just from 24 hours ago and just kind of really twisted it. So, and now we're looking at something else. So we have to kind of be on our toes. We have to have our circuit breakers kind of in place just for situations like this, where some trades will get knocked off. Some of our losing trades will get knocked off, but we're taking them before it can go further and hurt us. Now, if it rebounds on us, then, you know, that loss It sucks, but at the same time, we did the right thing, or at least the algorithm would have done the right thing if it closes that trade out. And it, you know, if it does the right thing, we can't complain about that. That's what we're here for. We're here to do the right thing. If our algorithm does the right thing, that's what we pay for as well. Right. So it's not just winning that we're paying for. We're paying for the management of all of these things, news announcements, anomalies. We're paying for the management through those times. And there are a lot of people today, believe me, there are a lot of people who probably were overloaded on one side or another of the market and they got crushed today. You know, a lot of people lost accounts just off of one announcement. So, you know, our job is to kind of keep you in the game. So that's, you know, as much as possible. Sometimes it's impossible, but that's our job. That's what we're trying to do. So looking at the New Zealand Swiss here, if we look at that, we've got full trend to the downside. We've got a wide open trend. This is one of the few that have lasted today. We did peak out over here above the 2021, but not for very long or for very far. So right now I'm not interested in taking a short here. We've got this consolidation going on. We want to see if this, you know, pullback will continue at least to the 50 before we would consider going short again. If, you know, other than that, we would have had to short a lot higher. So as we were pushing back into trend back here earlier today, then this was a point for us to short. Here's another one. We were yesterday, end of yesterday, we were pushing back into the 50. We could have shorted there again, you know, and then here we got another one, could have shorted there again, right? So we still got this wide open trend. It's open wide for us now. So I expect at some point there's probably going to be some pullback, but it's trend to the downside. So we're going to roll with what it gives us. As far as the New Zealand CAD, looking at this one, we've got trend to the downside. We look at our 720, it was really, really flat for the longest time along here. But then now our moving averages have jumped below, and now we even pull back to the 21 here, and we're, you know, looking at more movement to the downside. Now, it's not saying that it can't go up here and test this 50. So that's what we'll be watching for too. At some point, the move will exhaust, and then it will kind of, you know, trim off a little bit of the movement and then continue on its way when it's more sure. So that's kind of the New Zealand pairs. We can see that, you know, short is kind of the rule of the day today. We're all underneath the 720 EMA. So then we're looking for short trades. All right. Let's look at the pound yen really quickly. The pound yen was up here in this trend to the upside. Remember yesterday we were taking several trades to the upside and winning those trades profusely. And then now we've, you know, witnessed the markets just turn back against us. We are still above the 720. The rate's above the 720. The 200, 150, 21, and 8 are above the 720. They're not in order, but this presents opportunity for us because if we do go back to the upside, we can place an order on this 200 or this 100 or this 50. Any of these right here can be our order points to enter the market. If this does careen back to the upside, it kind of just gets its footing and careens back to the upside. We have the opportunity to win some of, like we were winning yesterday again on this trade. So I think this is a great idea for us, a great trade idea for us as well. If we don't, you know, go back to this 200 or higher, one of these other moving averages, and we continue on down, then we didn't get involved in the trade. We just take our pending trade off and place it where it needs to go next, or delete it until it's time to use it again. Here's our pound Swiss. On the pound Swiss, we can see that we've got order to the downside in our moving averages. Only thing in, you know, sticking out here is in the middle is the 720. So rate is below the 720. So we're looking for short opportunities. This is a young trend at this point in time. So maybe we're going to get a little bit of a pullback and then a fall again. So I think that's, you know, going to be something that we're interested in. Once we get a little bit above maybe this 21, maybe pull back to the 8, which is trying its best to jump over our 720 right now. So we don't really want to go early, you know, let it get past the moving averages and then dump your order in. If I'm going to use the 21 as an aggressive entry, I'll use the 21. Or I could be more conservative and wait at least till the 50 or the 100. You know, rate kind of hits that area, and then I feel like maybe we're going to head back down. Here's our pound CAD. Our rate is above the 720. But remember, we had this whipsaw action. We talked about that going on, just kind of whipping back and forth. We're just kind of moving off to the right here. No real, not really higher highs. They're slightly higher in a way, but not really higher highs. We're getting these lows that are pretty much around the same place in this area. So now we're bouncing off the 720. So it remains to be seen whether that 720 holds as support, and do we go back into the uptrend that we had, going on earlier, late yesterday and early today. Do we go back to that trend? It's easier to go back to the trend than to totally switch trend. So, if I'm looking at it, I'm looking at it like, okay, my order maybe needs to be here on this, one of these moving averages to go long. If I go long from there, then maybe there's some real upside for me. Pound Aussie. The pound Aussie kind of wasn't really affected so much by the news itself. You can see that we still have trend to the upside. Our 8 has jumped over our 21 just a little bit, tiny bit there. And the rate is sitting on the 50 right now. So this is a place where we're watching, because this might be a great setup for us if it can push down here a little bit more below the 50, where we can drop a pending order on the 50, or we can drop a pending order on the 21 if we're really ambitious about it and a little bit more risk taking. We can drop an order on the 21 here as a buy, whatever that level that is, and then looks like it's at 180, 112. So we can drop an order there and keep on moving up. Let's look at the Euro New Zealand. On the Euro New Zealand, we see that we've got trend to the upside, right? Look at that, wide open trend to the upside, no reprieve because of the news or anything like that. We're just moving on up to the upside, right? And now, we may, because we got this big red candle kind of going in here, we faltered a little bit as we pulled away from this 50. We got a little ways away from that, a little bit of an angle, and now we're kind of falling back just a little bit. We may continue to ride this up. The rate might continue to ride the 8 and, even higher, but we'll be looking for pullbacks. This is full trend, so this is definitely on our list, Euro New Zealand, right? As far as the Euro Yen, we talked about that, as far as the Euro US, but the Euro Yen is another yen pair. We had this trend to the upside. That's what we developed. It didn't last very long as we dropped down here because of this news. And now we're just kind of consolidating. So we're going to see, does this break into a real trend to the downside, or are we going to resume our move to the upside? And so our 50 and our 100 are out here. That's where we're going to place our order at. What about this Euro pound? Let's see kind of how that is moving around today. Our 720s out here at the top. So we're sitting quite strongly on the 720 right now. Kind of at that same level. That's where the rate is. You look at our 100 though, it's trying to jump over our 200. And then we've got our 50, 21 and our 8 and open to the upside. Now they're turned down a little bit, the 8 and the 21, but that doesn't mean that it can't open back up. Maybe this is just improving price for us. So we want to see this price maybe come down just a little bit more, and then look for maybe that move to the upside. But do we really want to buy here? We'd be aggressive if we bought here because we're underneath this 720. So we're going to see where this goes. We have to see how this sets up first. We want to see our full trend, and then we want to see rate at least above the 720 before we start looking at buying, on these moving averages. I'd like to see the 50 and the 100 above the 720, just to be a little bit safer with the trade. Let's look at the Euro Swiss. On the Euro Swiss, we see that we've got our moving averages all in order to the downside here. Our 720 is even in play. It's just a young trend right now because it's very, very thin. All the moving averages are very close to one another. So it's very easy for something like this to, to reverse on us. So we're going to be watching a little bit. We want to see it open up like kind of how it did out here. We want to see it open up a little bit and then pull back. And then we can place our orders on those moving averages as our areas to enter the trade. That's young, that's new. So we'll see what happens with that. So that's the Euro Swiss and the Euro New Zealand we at least have on our minds for today. And then let's look at this Euro CAD. As far as the Euro CAD, we've got trend to the upside. The 8 is just about trying to cross the 21, but we're moving off to the right. If you really look at it, we're just kind of moving off to the right here. And so, our idea is that since we are above the 720, that if it does break out, it should break out to the upside because we're above the 720. But, who knows? Maybe it comes down here to 720 test and then falls through support. But right now, looks like, at this point in time, we're well underneath the 50, and then we're underneath the we kind of fell underneath the 100. We're just kind of sitting right on top of it right now. So if I'm placing an order to the upside, it's going to be here on the 50 or even the 21, 50 or 21. You can make that choice, and then hopefully we'll move to the upside. Looking at the Euro Aussie, we are in order to the upside, right? Same kind of thing. The 8 is just barely getting over the 21 up here, but we've got wide open trend to the upside. The 720 is even in play. And so it's acting as our support, and we should continue in this trend. Now, if that news today didn't pull it down, I don't doubt there's too much that will pull it down out of the trend until it exhausts. So even if it's pulling back a little bit, this is our time to shine. We're looking at orders maybe on the 50, if it drops closer to the 100, or we could place an order here on this 21. Right now it's at 164.93. So just be mindful that that's right ahead of 165, only 7 pips to 165. So you got to be careful with that a little bit too. And not that you can't place the trade, but just know that if it's going up that direction, it's probably going to stall out around that 165. Just because it's a nice round number. There's going to be a lot of stop orders there. There's going to be a lot of limit orders there. And the brokers know that. So they'll probably go to that level and just kind of pick off whatever trades they need to execute. Because you think about it, the broker, they make money on executing trades. Typically, you're not paying a commission because they're getting both sides of the trade. When they're taking in your position, they can sell it to somebody else. And the gap, that spread in between, which you guys learn about in your online education, that spread is where they make their money. So they take a piece of the spread. Yeah, so looking at the Swiss yen, we are above the 720. We don't have trend to the upside because our 50, our 21, and our 8 are headed down, while the 200 and the 100 and the 720 are headed up. So there's a little confusion there. That's what's great about this system, is like you can just see it. When the confusion's there, you can see what's going on. It's the best thing in the world just to quickly be able to look at it and say, okay, this is what's happening, right? And so from here, we're just going to kind of hang out here. Maybe our order goes here on this 100. Maybe our order goes here on the 50 for a trade to the upside. And if we get a real push to the upside, then, we've got a nice trade going on there. So that's the play for that one. As far as the CAD yen, we are down here just kind of hanging out on the 720. We bounced below it and then went right back to the 720 and are just kind of hanging out there. Now we do have the other moving averages in order to the downside, but most of them are above the 720. The 200, the 100, the long-term ones are above the 720. So we have to kind of respect that because, the long-term trend, traders are going to be looking at the long-term trend and interested in trading in that direction. So they're still above. So but the 100 is below the 200. So we'll see how this develops. Does it develop and can you continue to fall? We'll see. It may depend on some of the fundamental news. We'll have to see what's coming out, on the daily market overview show. In the morning, we'll be looking at the fundamentals, kind of figuring out what direction things are going in, and what the news is and how that might contribute to the direction that we see. So we've been over the Aussie US. Let's look at the Aussie New Zealand right now. This trade here, we see that we're underneath the 720, right? And then so now our moving averages are a little bit out of whack here, but we can place an order on this 100 or maybe on this 50 for short orders if we're going to continue back into this trend that we had previously. We are underneath the 720, so it's not so hard to fathom that that could occur, that it could fall back down below. And lastly, on the Aussie yen, looking at this particular pair, same thing. We've got trend to the downside. Almost our 100 is just about jumping over our 200. We've got, everything else is set up kind of to the downside. Once that 100 jumps over the 200, we've got full trend, really. So as long as the 8 doesn't kind of, pop over the 21, we should be in full trend to the downside. But we'll be looking for these pullbacks. So this is a good pullback to watch. And we're a little ways away from the 50 and the way the 21, the 100 is set up and the 200 is kind of close to it. We're a little ways away from that. So I wouldn't be surprised if we snap back into that a little bit, get a little closer to the moving average and then proceed on. Or change direction. We've been moving in an upward fashion and quite a bit. So this news that came out kind of affected the market, but that's not, doesn't mean that that's set in stone. Just, we have to recognize that we did have kind of a news anomaly that occurred at the same time. So we're going to be looking for, just mindful of that particular, caveat in the market right now, because we can't just, technical trading, it works, but we have to be mindful of what's going on with us in, around us in the world when we're making these decisions, because if we're unaware of what has occurred, we just think, oh, this is, look, we're in downtrend, but we don't know how we got here. We have to kind of understand how we got here and what was the catalyst that put us here. Once we start understanding some of those catalysts, then we can make decisions about, okay, I'm looking at a downtrend, but I know that there's something out here that drove the market that way. And, maybe it's not a solid thing at this point in time. Let's really kind of wait maybe till tomorrow and see how solid that is. There's going to be a lot of talk about this announcement that was made today. So there's going to be a lot of banter on, CNN or MSNBC or, any of the financial channels are going to have a lot of banter about this. So we're going to have to deal with, that and just kind of process that. And traders will be processing what they feel is coming out of that, out of that banter as well. And then figuring out what's real and what's fake at this point in time. Are we really waiting until after, the election? Or are we going to try to do something before that? Are we trying to do something immediately? Because a couple of days ago, he was, Trump was saying to, come together and do something immediately. Then today he says they're not going to do something until after the elections. And then a couple hours later, he says, well, we should do something, but you need to bring me this and I'll sign it. So it's all over the place. For a couple of days, it's just driving the market in different directions. It's going to drive traders crazy, but they're going to love it too, because it's creating volatility that they can trade on. And, if they've got a good system, it's going to be a little pain to do, but they can make money. So they realize that. So it can be a good thing for traders as well. So I don't want to paint it as a seriously bad thing. All right, so I'm going to go ahead and jump out of here. Hopefully you guys get a chance to watch this show. If you can't get it, live, you can get it on the rerun. Hopefully you're inviting your friends to check it out as well. You can get that on the YouTube if you're connected. I make them unlisted on YouTube because I don't want the general public to have this information before you have it. And then eventually someday maybe we'll make some of those videos public or whatever. People can watch them if they need to watch them and just kind of learn what we're doing. But we really want to encourage people to come and join the company, because the company has to survive, and the company needs I need to be successful with the company, because there's a lot of things that are tied to it that I can do. A lot of things that I want to do for other people, and a lot of things I want to create that are really, really cool. And we'll get an opportunity to do something really, really nice for people, and create a legacy that's uncommon. So that's where I'm headed with this. So once again, my name is Derek. I hope that you guys have a great rest of your trading day. If you're trading early over into the London session tonight, great. Just be careful in what you're doing there. And I wish you the best. All right. Once again, this is Derek with iLi Academy. I'll talk to you soon. All right. Bye.